4 things you should look for before placing a trade. That is going to be the topic of today's video. Many times it happens that when we want to take trade in the live market, we get confused because we have to see so many things: support, resistance, trend lines, indicator, option chain, open interest analysis. So many things we start looking at and we'll get confused. So that is why in this video I'll discuss about 4 things which you should look for. If you look at these 4 things, then you can ignore other things. But remember, this video is mainly for people who are into swing trading. If you have purchased my swing trading course, then you already know that, because in my swing trading course I discussed all these 4 things in much detail. But in this video I'll just give you a glimpse of those 4 things which you should know before placing a trade. First thing is, you should always know trend of the market. You should know the structure of the market, whether it is in the uptrend, downtrend or sideways. Whether you are trading in indices, whether you are trading in stocks, whether you are trading in currencies, whether you are trading in commodities, always it is very important that you should know overall trend of the market on higher time frame. You should know whether it is in the uptrend, whether it's in the downtrend or whether it's in the sideways. So that is the first thing you should know if you are a swing trader. This is not really important for people who are into day trading, because in day trading you don't have to bother about what is the overall market direction, whether it's in the uptrend or downtrend, because in day trading we only play for few minutes to couple of hours, right? That is what day trading, you don't carry forward your position, so you don't have to worry about trend of the market. But in swing trading or a positional trading, it's very important that you should know overall trend of the market. Okay, now look at this chart. Can you see what is the trend here? Trend, you can see totally uptrend. Somewhere here uptrend started and you can see that it's in the strong uptrend. So the structure here is the uptrend. So what you should be here? You should be only buyer because it's a uptrend. Now let us see the next one. You can see that totally downtrend, right? So this stock totally in downtrend, so that means you should be seller. Is this in uptrend or downtrend? Is it in uptrend or a downtrend? It's neither in uptrend, neither is in downtrend. What is this trend? Sideways, right? You can see that it is going in sideways mode. So that means this is neither uptrend or downtrend. Okay, now what about this? Is this uptrend, downtrend or a sideways? You can see that here it was going down, started going up, started going sideways, again started going down, now started going up. So what is the overall trend? What is the trend on higher time frame? That is the daily time frame. So this is a no trend, right? There is no clear trend. It is showing down here, then went up, then sideways, then down, again started going up. So that means overall trend is not clear, neither uptrend, neither downtrend, neither it is sideways. Then what you should do? You should not trade. Okay, don't trade in this instrument, don't trade in this kind of instrument where trend is not clear. Okay, because there are so many hundreds of stocks available. You can move to next stock, the stock which is showing you clear trend, something like either can be uptrend or a downtrend or a sideways, whatever. You can see that how clear is the trend. Clearly you can see downtrend here, clearly you can see uptrend here, right? So for that you have to go to daily time frame. Okay, when you go to daily time frame chart, you can see the trend in much clearer way. That is about knowing the trend of the market. Okay, now you have understood about the trend of the market, which time frame you have to see everything. Now let us discuss about the second thing. What is the second thing you should look for? Second thing you should always look for, value area. What is the value area actually? Value area mean buying at the discount when you are a buyer, selling at the premium when you are a seller. Let me give you a small example so you will understand it much better. Suppose you want to purchase a flat for investment purpose. When you want to buy a flat for investment purpose, you will not go and buy it immediately, right? You will always wait for the price correction or some discount. If you see that real estate price at the peak, at very high, then you wait for some time so that price can come down, so you can buy at better price or buy at the discount. That is how being a buyer you think. Suppose you already have a flat, okay, you already have a flat and you want to sell that flat, then what you will do? You will always wait for the right opportunity. That is, you always try to sell when real estate prices are very high. That means you try to sell at the premium, right? When you are a seller, you want to sell at the premium. When you are a buyer, you want to buy at the discount. That is known as buying or selling at the value area. If I had to give you another example, same thing. If you want to buy a gold, you will not buy a gold when prices are very high. You will wait for price to come down little bit so that you will get better price. Same time, if you want to sell the gold, then you look for the prices to go up so that you can get the better price. In trading also same thing. You should always buy at the value area. That means buy at the discount. And if you want to sell, sell at the premium. Now what is actually value area? Value area can be as simple as your support resistance. Value area can be as simple as moving average. Value area can be your CPR, or value area can be your supply demand or your pivot points. It can be anything. Okay. So that means you should always wait for the best price to correct it and come towards the value area, then you should buy it. So that means you should always buy at the discount when you are a buyer. So that is the second thing about the value area. You should look to buy at the value area, right? If you are a buyer, you should buy at the discount. That means value area. I given the example of real estate. Real estate, I said, when price is at the peak, you don't want to buy, right? You want to have some correction. If you want to buy some gold, you don't want to buy at the peak. You wait for some correction, right? Same thing in uptrend also. Even though it's uptrend, you should be buyer here, right? But that doesn't mean that you will go and buy here. Doesn't mean that you will go and buy here. What is the best place to buy? Best place to buy at the value area. Okay. So how to know this value area? For that I said you can use either CPR, it can be support resistance, it can be moving average, whatever it can be, whatever the method you use. It can be any indicator also, your favorite indicator, but you should buy at the value area. About the value area and all I discussed in much detail in my swing trading course. Here I am just giving you a glimpse of how you have to buy, when you have to buy. Now this is the downtrend, right? In downtrend, what you should be? You should be a seller, not the buyer, right? You should look for the opportunity to sell. So for that, you should not sell here. 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 Okay. You should sell at the premium. Okay. So if you know the value area, then it is likely that you will sell at the peak. So that means these are the places you should look to sell, not here. Okay, that is what I said. Sell at the premium, buy at the discount. And now what about the third thing? Third thing about the entry trigger. That means once you have identified this is the value area, this is the place I am getting at the discount, but you should know where exactly you have to buy, right? You can't just go and close your eyes and you can buy wherever you want. That means you should know the entry trigger. There are three types of entry trigger. One is retest entry, second is ambush entry, third one is the traditional entry. Retest entry means buying at 50% discount of that entry candle. Ambush entry means not even waiting for the candlestick to close, buying right at the support or selling right at the resistance. Or traditional entry. Traditional entry is buying or selling at the entry candle. Entry trigger. So can you see that this is the sideways market? So what you will do, you will either buy at the support or sell at the resistance. So this is the place you think that last time market reversed from here. So another second time also it reversed from here. Third time when it came here, you want to short, right? You want to short here. But the thing is entry trigger, where you will short. Will you short this candle once it is closed, or you will go for a retest entry, or you will go for a ambush entry, shorting right at the resistance, or you will go for a traditional entry. That is what I said about entry trigger. Okay, third thing is entry trigger, important to know where you will short. In this video I have discussed in much detail, which I have uploaded few days back. You can go to this video and you can watch it what are the best entry techniques in trading. Now comes the fourth one and last one, which is very important. That is, you should know where is your exit, where you will exit, where is your stop loss. That means if your trade goes wrong, where you will get out. That means if you have taken that long near some support, instead of going up it is reversing, then where you will exit. Will you exit here, or will you exit here, or will you exit here? That means before even punching the buy or sell order, you should know where is your exit, where is your stop loss. Very important, because trading is not only about making profit, trading is also about managing the risk. That means preserving capital is more important in trading. That means nothing works 100% in trading. Whenever the trade doesn't work, then you should exit at a small loss. That is why stop loss is kept. So this is the fourth thing. Before even punching the order, you should know where is your exit, where is your stop loss. Fourth one, you should know where you will exit if that trade doesn't work. If that trade fails, where you are going to exit. For example, you see that, oh, it's in the strong uptrend. You want to enter long and you are waiting for the value area, and you identify, okay, this is the value area, okay, and you think you want to go long because it's a bullish pin bar, right? Assume that you went long here on the candle close. Yes, chances are high that it's in the strong uptrend. Maybe again it starts going up, but the thing is that where is your exit plan? If that trade doesn't work, you can see that after that there was a doji, then there was a small bearish candle. What you will do if after that, instead of green small candle, market starts falling like that? Will you keep waiting for market to bounce back, hoping that it will bounce and again I'll make profit? No, right? You need to have the exit plan. That means even though you went long here on this candle, where you will keep your stop loss? Will you keep your stop loss here below that candle? Will it be here? Or if you want to keep a smaller stop loss, maybe here. That is what known as exit plan. Where is my stop loss? You should ask yourself, where is my stop loss? Okay, I decided I'll go long. Where is my stop loss? So that's it, guys. These are the four things you should know before placing a trade. This all I have explained in very much detail in my swing trading course, that is Advanced Swing Trading Strategies. If you are interested, you can go below this video and you can click that link and you can purchase my swing trading course for 1 month access. So I hope you have liked this video. If you have liked this video, then hit that like button and consider subscribing to my channel. And if you are interested to learn more about day trading, then you can go below this video. In the description section, I have given the link about my upcoming day trading webinar. If you are interested, you can contact me on WhatsApp or email and you can enroll for my upcoming webinar on day trading. And I'll see you soon with a new video. Until then, thanks and take care.